What's up, everyone? Welcome back to the Eat Sleep Profit YouTube channel. Now, in today's video, we're going to talk about some swing trading tactics and setups, what you need to be doing, how to find these swings, and essentially have certain setups that have the potential to run to ungodly amounts. So you may want to swing trade because of like time constraints. It has an easier learning curve. A lot of people work 9 to 5s, so you can't just be micromanaging your day trading accounts and positions all day. So you want something you can place in the morning and maybe incrementally watch it throughout the day. So we're going to go over all that right into detail. You know me, no clickbait. We go straight into the action. Now, beforehand, I just want to congratulate somebody in the trade room here. K-Roy, been seeing your progress for the last couple of months, just consistently just getting bigger and bigger and bigger, growing your account. I don't pit my people, I don't give them enough credit. So everybody else in the trade room, I see you guys pushing out those profits. Congratulations. I just wanted to put that out there. So let's jump into the video. Jumping into swing trading here. Swing trading is going to have a lot of benefits over the day trading side. I don't think swing trading gets enough credit because a lot of people like this instant gratification where, boom, you're making money in a couple of minutes, you're in and out, blah, blah, blah. And this can get misconstrued in a lot of ways that there is typically a very high learning curve when it comes to day trading. No matter how simple my videos may seem, or all the videos on YouTube you may be watching, or even courses you may have bought, the learning curve isn't going to be easy at all. Now, swing trading, it smooths that curve. There is still a learning curve, obviously, but it's much easier because there's a lot of advantages to swing trading over day trading. Number one is the time crunch. So for example, with most day trades, let's say if we go back to a trade I took, and I had this in the trade room, I alerted this and we played the play. A lot of people wrote it and we made money on it. But in a company like RMED, very simple setup. You can see in my older videos, I talk about the setup all the time, red to green moves, and especially breaking over VWAP. So a simple setup like this, where you have the company dipping out of the gate, most of the time, early morning stocks that are gapping up with news overnight, there's going to be initial sell-off in the morning because people that have been swinging or people that have been buying into the pre-market, they're going to open the day and they may have weak hands and they may want to sell. I like seeing selling out of the gate because it automatically shows me that a lot of those weak hands have thrown out some of their positions, and then if it can find support and buyers can squeeze that price back upwards, then we can have a potential for a very, very good play. Now, in a trade like this, there's a potential to make a lot of money in a very short period of time. 10% within 3 minutes of some form of break of VWAP to let's say like the nearest whole number. Typically, I like to sell before whole numbers. Like my exit was 798. I look to exit before whole numbers because of the psychological resistance that typically develops at those points. You can see once it reaches 8, starts to trade sideways and then it dumps back down. Now, the problem with this is your profit is made over 3 minutes, and anytime that's the situation, you can lose money just as quickly as well. It's a yin and yang. So for example, if you time this wrong, let's say you delay your entry by 3 minutes, you have the possibility of buying at 8 and then end up selling in the 750s, losing 50 cents per share that quickly. Number two is when it comes to the PDT rule. So the PDT rule states that you have 3-day trades, so 3 entries and exits on the same day of the same stock per week or per 5 business days. So essentially, if you have less than $25,000 in your account and you're using any form of margin account, you're going to be under the PDT rule. Now, the cool thing about swing trading is a lot of the swing setups that I look for are going to be buying morning and selling into the run up of the next day, or buying in the middle or the end of the day of the previous day and selling into the morning of the next day. So what this does is essentially it's not a day trade anymore. I'm buying on Tuesday and selling on Wednesday. I'm buying on Friday, selling on, well, you typically don't buy on Friday, but buying Monday, selling Tuesday, buying Tuesday, selling Wednesday, etc. So you don't run into that PDT rule, so you can trade as much as you want. What is the environment you need to be in? So first off, you got to find them. So the way that I find a lot of my swing trades is using simple scanning techniques. We've seen 30,000 videos of me doing this. Pretty much price, volume, very, very straightforward. Also, what I'll look at is study filters, looking for near highs and lows, companies that are within, like, let's say, for example, their highest points of the year and lowest points of the year. I'm getting very, very in tune to find companies near their lowest points of the year. Typically, companies that are near their lowest points of the year are going to usually have lower RSI, and I use RSI as an indicator more on swing trading than I ever do on day trading. Day trading RSI really doesn't factor in my strategies. Not to say it's not a good indicator. Indicator is just a paintbrush. It just depends on the artist and how he paints it. Lower RSI stocks over time tend to have what we call a higher short interest of these companies. So when I look at a certain position, let's say like on a day trade like this, the same concept is applying, but on a much quicker scale. So if you look at this as let's say in the morning, people are selling, or people may be short selling. As people short sell a position, they are betting against it. They want it to fall in price for them to make money. Somebody's betting against a company, you're looking for support, you want it to squeeze upwards and you want it to take off. Now, with swing trades, I look for companies that have what we would call a high short interest or a higher short float percentage. Companies that have higher short interest or short float percentage typically become just tinder boxes of potential huge runners. The perfect example is GameStop or AMC. These were companies that were shorted and shorted and shorted. GameStop at one point, I believe, was shorted over 100%. So people were double borrowing shares to short. And essentially, you have one of the biggest short squeezes pretty much of all time. A company going from a measly $5 to $10 per share, going up to damn near 500 in the after hours. So you can see that there is a lot of pent-up frustration. Now, so if we look at something like WKHS and CLOV, both of these companies had very above average short float percentages leading to these runs that are developing. So you can see here, these companies are coming from some form of downward spiral, and also CLOV coming from a downward spiral as well, going from $17 per share progressively down to $6, hovering at the $6 per share support. WKHS Workhorse, $42 per share, coming down to $14. Now, since a lot of the media and a lot of common culture when it comes to trading, a lot of people always push that narrative, well, short selling is very dangerous because you have an infinite downside. That plays into the psyche of a lot of short sellers where they're not looking to bet against GameStop at 5 and buy it back at 500. They know that is still a possibility in cards on the table. So all you really need is just some bullish aspect into a potential swing trade, like something that has a high short interest, and it's been beat down to hell. All you really need is that inkling of a bullish development, and you can have one of the craziest short squeezes you can have. Strategy: how do you attack these trades in general? So if we blow this chart up, let's say like WKHS, that was a very, very good swing trade that I played in how it's developing. Let's say if we was to break it down to a system. First system is find companies that are at near their lowest points of the year. So like the yearly lows within like 10% or 5% or so. Another thing is making sure the RSI is on a lower average. Now, this is one of the most misconstrued things when it comes to RSI. I've seen a lot of swing trade videos where a lot of people talk about strategies, and a lot of people think it's a blind, it's like easy money. Oh, just buy a company that is going below 30% on the RSI. Or let's say it's in the blue area. A lot of people say the blue area of the RSIs, or it's in the oversold area. It's easy money. Sometimes you're going to have companies that are in the low side of the RSI, and you look to buy them for a cheap opportunity to swing, and they can keep on going lower. So it's not as easy as just looking for a low RSI situation. There more goes into the equation. So low RSI is preferred because you have the natural effect of a rebound looking to take place to help your position. Well, isn't your job as a trader to predict? My job as a trader is not to predict. My job as a trader, swing or day trade, is to take advantage of a move developing. So if you try to play the prediction game, if you want to play the prediction game, play Apple, play Tesla, play the bigger players, play things that are established that are sometimes too big to lose. Don't play the prediction game with these small cap companies like this because they can break your heart. The best thing to do is to wait for them to actually do what you're looking for them to do. Wait for the risk and the scenario to be within your favor, and then go after it from there. So if we look at like a 5-minute chart, and this is just a heads up, whenever it comes to swing trading, you do not need to look at any type of 1-minute candlestick charts. You can, it's all about preference. Let me just say it like that. It's all about preference. So in this area, what I'm looking to do is I'm trying to find a trade where I can get in as close to the moving average as possible, but also have the ability to sell it into the next day's potential move. So I always categorize risk as distance from a certain indicator or a certain referenceable point I can look at. For me, typically risk is going to be associated with distance to the moving average. So whenever you find a development start to take off, if like the most prime area to take this trade is once it's actually bullish, uptrending, as it's very, very heavily shorted on the float. This would be like the most prime area. Now, things can explode, remember, in a very, very quick amount of time. This is why you want to always have the ability to buy and sell in the pre-market and the after hours. I recommend learning about extended hours orders. Whenever you place an order onto a trade, look at the TIF, the time in force, and make sure it's like EXT for extended hours. So you can take advantage of moves that are happening early in the morning, later in the day. Not just between market hours. If it takes off and you don't learn about this company or don't see it not until here, this is the worst time to potentially buy into one of these positions, especially for a swing. Now, for a day trade, you can play the day trade here. I play gap and go stocks all the time. This is a day trade setup here. But for a swing trade, you have to look at risk associated with the daily chart. So essentially, if I look at the day and it's opening here, and I look at it in correlation to the moving average, we're 28% above the moving average. For a perfect setup for me, this would need to come back to the moving average and rebound, and I need to pick it on the upside. So that's pretty much what you're trying to do, is you're trying to have the closest distance to this point as possible. Now, the swing trade that I'm looking at right now, this is like, for example, today is Wednesday. I'm doing this early in the morning so I can get a video out here. Is look at the ticker Wish, which is not the Wish company that sells cheap ass products. This is some other like tech company or something like that. So this is a potential swing that I'm looking at right now, and I wanted to develop pretty decently. So for example, has huge short float. Short float percentage is what? 40%, some high number like this. A lot of people have just been betting against it. Short sellers are loaded into this thing. So now what I'm going to be looking for is I'm going to look for, maybe even today, some form of rebound. Let's say if we can rebound near the 9s or the 9.6s, I would even take 10. Rebound somewhere near this level, buy the trade, and look for a bounce to potentially develop. And cool thing about Thinkorswim is the markings you make here are gonna lay over. So you can see that $10 per share is typically going to be a heavy psychological level. This is going to typically be a point that for example, a lot of people reference, because it's the difference between going from a single digit to a double digit. So for example, if we're on the below 10, 10 is always going to be a hard resistance. If we're above 10, 10 is going to be a very, very solid support. So look for this to potentially bounce off of that $10 per share level. By that time, the EMA is probably going to correct near this point, and you're going to have a low risk, potentially high profitability opportunity going forward into the next couple of days if it can continue to squeeze higher and higher. So a lot of times you're going to get these very frantic initial reactions, which you can day trade profit from, but once the dust settles, there may be some secondary and tertiary moves that you can look to profit from on the swing trading. Any questions you guys have on swing trading and the setups, the things that you need to be doing, let me know. I'll have my contact information below. Pretty much anything else you guys need, put it in the comments box below. You can find my contact information. If you have any questions, you can DM me. You can text my number. I don't see any issue of it. Not a lot of people, not a huge amount of people watch these videos. This is very specific. So cool. So hope you guys enjoyed. Let's make some money in the markets.